Good morning.
Good
Morning.
sir.
Cash flow statements. There are two methods, direct method and indirect method. Till now, whatever we have seen is direct method. There are three type of activities, correct? Karthik ji, say the format of cash flow statement.
Cash flow from operating activity,
Any cash flow from
investing activity, financing activity.
Say some examples of each activities.
For financing activity, let's start from financing activity. Issue of equity share, loan taken from financial institution, dividend paid, preference share issued. For investing activity, it will be fixed asset purchased. Investments made. Dividend received. So operating activity will be daily activities like amount received from creditors, amount paid to
Amount
debtors,
received from
debtors, amount paid to creditors, cash purchases, cash sales, salary paid, overheads paid, so on and so forth.
Okay. And the summation of above will be say sir.
Summation of amount will be the sum of the above A plus B plus C.
Is
Investment
equal to
opening and closing cash and cash equivalent.
sir, sum of the above is equal to net cash flow for the year. If you add with opening, you will get closing cash and cash equivalent. Okay.
Yeah.
This is direct method. Till now we have discussed. What is indirect method? Very simple. Everything from this will be same. Cash flow from investing activity, cash flow from financing activity, net cash flow for the year, opening, closing. Everything will be same as above. Only the difference comes in cash flow from operating activities. Okay. Except this, everything is same as direct method. The logic of direct method is what now? Whatever cash inflow minus cash outflow received from debtors minus payment to creditors, cash sales received, expenses paid, cash purchases, cash outflow. So direct, you are taking the cash flow under direct method. Indirect method, cash flow from operating activities is arrived from profit. Direct method, cash flow is equal to, what is cash flow from operating activity? Cash inflow minus cash outflow. Under indirect method, what is the cash flow? Profit plus 3 adjustments. Profit plus 3 adjustments you have to make to get the cash flow from operating activity. Clear? First point. If you arrive cash flow from cash flow itself, what is the total cash inflow? What is the total cash outflow? Net is equal to direct method. Here I am not at all taking the cash flow. I am going to get the answer from profit. That is in indirect method. I am going to compute only cash flow from operating activity. So investing, financing, everything will be same. Only the difference will be for cash flow from operating activity. For that, first you should know profit and loss account for that. Profit and loss account. Everything is prepared on accrual basis. Profit and loss account is prepared on accrual basis. But here cash flow statement is prepared on cash basis, correct? Cash inflow minus cash outflow, cash basis. For example, by sales, cash plus credit, I'm going to take. In profit and loss account, by sales, to purchases, this is also cash plus credit. Then two expenses, paid plus payable. By income, paid, received plus receivable. To depreciation, which is non-cash item. Here expenses na 100 rupees expenses na 100 rupees you are going to pay. But here depreciation is a non-cash item. Depreciation 100 rupees na you are not going to pay 100 rupees. Then two bad debts, non-cash item. Bad debts you are not going to pay in cash. Like that, to provision, I am going to provide some amount, provision for bad debts or provision for taxes, whatever. So everything provision is nothing but unknown amount of liability you are going to provide. That is, you are going to make a reserve. Actual payment will be made later. Right? Then two, interest, dividend paid. Then by interest, dividend received. Okay, Kraksa. Then by gain on sale of investments or PPE. To loss on sale of investment or PPE will come. So difference will be to net profit for the year or by net loss. Correct? So this is the or just summary of profit and loss account. Correct? So now I am going to get cash flow from operating activity from profit. Profit means profit before taxes I should take. Profit means profit before taxes. How to get the profit before tax? Profit after tax plus provision for tax. If you add, you will get a profit before tax. Profit after tax is nothing but after providing for taxes, whatever amount is there, that is profit after tax. Correct? So if you add a provision for tax, you will get a profit before tax. This is the starting point. Sometimes profit will also be not given. If profit and loss account is available, you will take a net profit. If profit and loss account is not available, what is the net profit? Net profit is nothing but changes in reserves and surplus. This net profit in case of company will be added to. In case of sole trader, yeah. Yeah. Oh. Yotsna,
Sir,
in case of sole trader, profit will be added to Nama. In the profit and loss account profit, what you will do? In balance sheet, you will add with ஹலோ தெரியுமா தெரியாதா சொல்றீங்களா இல்லையா?
தெரியல சார்.
என்னம்மா பேசிக்ஸ்லாம் இத்தனை சம் போட்டோம் பார்க்கலையா? இந்த சம்லாம் பார்க்கல?
பார்த்தேன் சார்.
பார்த்தீங்களா? பார்த்த மாதிரி தெரியலையே. நெட் ப்ராஃபிட் இங்க இருக்கு 15,120. வாட் ஐம் டூயிங்?
Adding to capital.
என்னம்மா? Okay. So in case of company, it will be added to capital. Sorry, in case of sole trader. In case of company, it will be added to profit and loss account, which is under the head reserves and surplus. Company balance sheet, reserves and surplus will be there. For example, in this question, if you take capital reserve, revenue reserve is there, correct? Reserves and surplus. Sometimes a profit and loss account is there. Shareholders fund, share capital, reserves and surplus, profit and loss account is there. So profit and loss account is nothing but accumulated profit. Every year profit we are adding. Instead of adding to capital, we are showing under the separate head profit and loss appropriation account or profit and loss account surplus. In case of company, as per schedule 3, we will prepare this. Okay. So anyway, this net profit will be added to reserves and surplus or capital. So if net profit is not available, what we can do? Net profit you can directly take from reserves and surplus or capital. So profit is nothing but increase in reserves and surplus. Whatever increase is there, that will be the profit. Increase in reserves and surplus or increase in capital in case of sole trader. So first profit before tax is the starting point. Here I have to add non-cash items, non-cash expenditure. Because I have deducted bad debts, but I have not at all paid that. So up to that extent, it is not a cash outflow. So you have to reverse this. Non-cash expenditure already you have deducted, but it should not be deducted for cash flow statement because you are not going to pay this. So non-cash expenditure means what? Depreciation or amortization of goodwill, amortization, then bad debts, any other provision if you are having, that is also a provision for tax here you have added. Any other non-cash expenditure that by seeing many sums we can increase the list. Just as an example I'm saying, depreciation, amortization, bad debts, these are all non-cash expenditure which should be added. Then second adjustment, adjustment for interhead or interhead adjustments, like that I will say. What is interhead adjustment? Items required to be adjusted in investing or financing activity, but taken to profit and loss account. Actually, it will come for investing activity, but for profit and loss account preparation purpose, I have taken that. Examples is what? Interest paid, dividend paid, that I have already deducted in profit. Profit I have deducted interest dividend paid, but actually interest dividend paid will come in financing activity. Interest dividend paid will come here. So what I should do? Here I will add, here I will deduct. Because any one time only we have to deduct. In financing activity, I am going to deduct that. Again, I should not deduct here. Correct? So already whatever it is deducted, that should be reversed. Then loss on sale of fixed assets. Loss on sale of fixed assets, actually loss on sale of fixed assets is deducted here. So you have to add back. But here we will not only consider loss, total cash flow. Sale of fixed assets, what is the cash inflow? That I will add here. Here I will compute only profit or loss, that only. So that profit or loss portion only you should reverse in profit and loss account. Because profit and loss account, I am not taking the total cash flow from sales of fixed assets. Costing 100 rupees, sold for 120 means what? I will write as an example. Asset costing 100, sold for 120. What I will do? Entry will be cash account data to PPE to P&L. Cash account data are 100, to PPE, cash account data are 120, to PPE 100, to P&L 20. What I will do here? Sale of fixed assets, I will add total cash inflow of 120. Total cash inflow of 120 I will add. But in profit and loss account, I would have added only 20. So that I should deduct 20. Or same example, asset costing 100, sold for 90. In this case, entry will be cash account data to PPE, P&L, debit, loss. So cash account data are 90, loss 10, total 100. In this case, what I will do? Sale of fixed assets, total cash inflow of 90 I will take here. But in profit and loss account, how much I have deducted? 10 I have deducted. So that I should add back, plus 10. Right? So like this, interhead adjustments. Like that, interest and dividend received. Actually, interest dividend received should be added in investing activity. But I have already added in profit. Correct? Here I have credited by interest or dividend received. So that I should reverse.
Yes, sir.
Nama Priya, I called you. What happened?
Who's-
Can you come back? Okay, no problem.
I just, that's it. Phone was on top and I was.
Yes, okay. So, in profit, we are going to make 3 adjustments. One adjustment is for non-cash expenses. Another adjustment for interhead adjustments. Interhead adjustments examples, sale of fixed assets, interest dividend received, interest dividend paid. Just everything, three examples I'm saying. Then, here what are all the adjustments we have made? Loss, gain. This adjustment we have reversed. Correct? Sale of fixed assets, loss. This adjustment over. Then, this adjustment also over. Provision, non-cash item, so we have added. Bad debts, non-cash item we have added. Correct? Depreciation also non-cash item added. So this effect has been carried out for all. Just for understanding purpose, I'm deleting this. Correct? So in profit and loss account, what are all the irrelevant items for cash basis of accounting we are removing? Correct? We have removed everything. Now pending is what? 2 purchases by sales, 2 expenses by income. Here the effect of credit or payable or receivable, that only I should adjust. Okay. So everything adjustment has been carried out. In cash flow statement, expenses paid I should consider. But in profit and loss account, paid plus payable I have considered. Then in purchases, what is relevant? Cash purchases and amount paid to creditor is relevant for cash flow statement. But in profit and loss account, cash plus cash purchases plus amount paid to creditors I have not taken. Entire credit purchase I have taken here. Like that, here sales also, cash sales plus amount received from creditor is required. But cash sales plus total credit sales I am taking in profit and loss account. Okay, so these are all the adjustments I have to make. This cash sales, it will not come in balance sheet. Credit sales, for credit sales only you are having debtors. For sales, you are having debtors. For purchases, you are having creditors. Then expenses paid, payable. Paid already considered in both. Payable. Expenses payable will come in the balance sheet. expenses outstanding or prepaid expenses, whatever. So both will come in the balance sheet. Then income receivable, that is also income received in advance or income due. This two will also come in balance sheet. So balance sheet, these are all called as current assets. Then in profit and loss account, you will have two opening stock, then buy closing stock. That also you will have. Right? So all this current assets and current liability is called working capital. What is working capital? Working capital is equal to current assets minus current liability. That is the formula for working capital. So working capital consists of current assets and current liability. So that adjustment for working capital also you have to do. What is the adjustment for working capital? Very simple. Assume in this way. Balance sheet, opening balance sheet and closing balance sheet. One liability is there. Opening 100, closing 80. One liability in the balance sheet, opening value is 100, closing value is 80. What does it mean? Liability has been paid. Correct? Now opening liability 100, closing liability 80 only. So what happened? 20 liability you have paid, then only 100 is becoming 20. So liability decreases. Means cash, what will happen? Cash paid means outflow. Or liability 100, 150 means what? That is creditor or any other liability. Opening liability is 100, closing liability is 150 means what? An additional loan taken. Additional loan taken now 100 is becoming 150. So cash received plus. Then if you remember any one thing, everything will be opposite. If you remember this, liability increases. Increase in current liability is equal to cash paid. Decrease. Decrease in current liability is equal to cash paid minus. Obviously, increase in current liability will become cash received plus. So, decrease in current liability is cash paid. Decrease in current asset opposite, cash received. Then, increase in current asset, cash paid minus. Okay. Or as a crux I'm saying, increase, decrease. Liability, asset. Liability increases. How liability will increase? If you borrow, liability will increase. So cash will also increase. That's it. If you remember this, everything will be ulta. So decrease minus. This plus na asset minus. This minus na this is plus. That's it. Or if you want a separate reasoning, that also we can provide. Liability 100 becomes 80 means what? To that extent 20 rupees cash paid. So minus 20. 100 is becoming 150 means what? You have additionally borrowed 50. So borrowed 50 na cash balance will increase. Then any other stock I am taking. Stock 100 becomes 80. Means what? Stock has been sold. Stock sold. Then only 100 is becoming 80. So decrease in stock is nothing but cash received 20. You have sold the stock. If you sell the stock, cash will increase. Then like that debtors. 120 debtors is becoming 150. Means what? Stock itself I am taking. Stock 120 is becoming 150. Means 30 stock you have purchased. Then only stock will increase. So if you purchase stock, cash will be paid. So minus 30. So this adjustment you should do for working capital. So profit and 3 adjustments you have to make with the profit. Finally, less taxes paid is equal to cash flow from operating activity. So instead of taking cash inflow minus cash outflow, we are making 3 adjustments What are the three adjustments? Non-cash expenditure, interhead adjustment, adjustment for working capital. Working capital adjustment means what? Increase in asset, decrease in current assets, or increase in current liability, decrease in current liability. Appropriately plus or minus you have to do. So finally, if you deduct the taxes paid, you will get cash flow from operating activity. That's it. One sum we will discuss. You will know the crux. Priyanka,
So,
read the question.
Ganapati LLC submits the following information pertaining to a year. Using the data, you are required to find the ending cash and bank balance given an opening figure thereof was 1.55 million. Particulars, additional debtors and creditors. Additional shares issue 6.50 millions. Capital expenditure 9.90
So say
million.
where we have to write line
Proceeds-
by line. First, additional shares
first-
issued. Where it will come?
Wait, sir.
So last class you have not attended, correct?
Yes, sir.
Have you revised? Okay, no problem.
No, sir.
Okay, no problem. Jyotsna,
Sir,
additional shares issued. Where it will come?
financing activity.
Plus or minus?
Plus
6.5 plus. Then capital expenditure. Abdina என்ன அர்த்தம்? What is mean by capital expenditure?
which will not occur regularly, sir.
Example? Assets bought.
Yes, sir.
The capital expenditure. Okay.
Okay, sir.
So where it will come?
Investing activity.
Plus or minus?
Minus.
Next.
Proceeds from assets sold 1.60. Investing activity, sir.
Sale of?
Fixed asset
Plus or minus?
1.60 plus.
But sale of fixed assets, obviously gain or loss will come. That would
Yes,
have been
sir.
already adjusted in the profit. Correct?
Yes, sir.
So gain on disposal, how much?
1.20.
Negative la irukku. Gain negative. Apana it is not a gain. It is
Loss on fixed assets. Sale of fixed assets.
So in profit it is already added or deducted?
It's already deducted, sir.
Now we have to reverse. What I should do?
Add it.
Add.
Add it to profit.
Add loss on sale. 1.2 I should add. Okay.
Yes, sir.
Then dividends declared.
Dividends declared financing activity, sir.
Minus. Then
Income before deducting dividend declared.
profit.
Okay, sir.
Profit before tax I should start like that I told. Correct? So
Yes,
profit
sir.
before tax they have given us 3.3. Then
Increase in accounts receivables. Cash flow from operating activities. Increase in assets. So we have to subtract it, sir.
super. So less increase in debtors. You have to subtract 1.5. Then
Redemption of 4.5 debentures. Financing activity. Subtracted. Depreciation and amortization. Operating activities added, sir.
So say actually cash flow from operating activities la profit plus 3 adjustments. What are the 3 adjustments?
Non-cash items, interhead adjustments, adjustments for working capital.
Say what are all the adjustments we have given? Loss on sale, which category?
Loss on sale is interhead adjustments, sir. Increase in debtors, adjustment for working capital, and depreciation and amortization is non-cash item.
Super. So net cash flow for the year will be this plus this plus this. Opening cash and cash equivalent given us
1.55 million.
so closing cash and cash equivalent should be
0.5 million.
clear.
Yes, sir.
Any other doubts?
No, sir.
Karthik ji.
Sir.
This question already we have solved under direct method. Okay.
Okay.
Now indirect method we have to say the answer.
Okay.
First opening cash.
Opening cash is 14,000.
Closing
4,000.
so it should be 10,000 negative, correct?
Yes, yes.
First say the format of cash flow from operating activity under indirect method.
We need to add profit from profit before tax. Add non-cash items, non-cash expenses, interhead adjustments.
Then
And then
working capital changes.
Changes in working capital.
So here profit given how much?
1,000.
1,000 is the profit. Non-cash expenditure.
Non-cash expenditure.
Sir, profit and loss account given, sir.
Ama sir.
Non-cash என்ன?
15,000 is depreciation.
Non-cash expenditure we have added. Correct?
Okay.
Then
And
see
then,
line by line. Trade receivable.
Okay. Trade receivable has come down actually. So it is increase in cash.
First
So-
we will write. What are all the items now?
Okay.
Trade receivable, prepaid insurance, stock. Only current assets we have to take, correct? Fixed assets will not come. Then current liabilities you are having trade payable, wages payable, correct? All so what is the closing figure? What is the opening figure?
Closing figure is 32,500.
Sir.
Trade receivable, okay, 25,000. Insurance is 5,000 and then 37,000. Okay, 18,000. Here 4,000. Opening is 32,500. Is 7,000. 34,000. Yeah, 16,000. 7,000. Yeah.
So this minus this. Plus na increase, இது decrease. Correct? Decrease decrease, decrease, this to increase. Okay, already what I told. For current assets, current liability. Current assets increases na?
Current assets increase, the cash will go down. So negative. Yes.
So this plus
Positive.
minus plus.
Yeah.
Any one you should remember, that's it. So
Okay.
everything you should adjust. First trade receivable decrease. Decrease in receivable.
Yeah. 7,000 positive. 7,500 positive.
Then decrease in
Pre-
prepaid.
yeah, insurance. Positive 2,000.
Then
Then
increase in
stock negative 3,000, and then
increase
trades
in
pay,
trade payable.
so positive. And
Decrease
then
in
last wages payable decrease, so negative.
அவ்வளவுதான். ரைட்டா?
Okay, sir.
So டோட்டலா then இப்போ everything taken care except fixed assets. Fixed assetsல what happened?
Increase in fixed assets 46,000 increase ஆயிருக்கு sir.
Also they have given here ABC Limited paid 46,000, correct? So purchase of fixed assets
46,000
plus or minus
negative. Yeah.
So இப்போ cash answer trade receivable, prepaid insurance, inventory, fixed assets, depreciation, everything covered. Then accounts payable, wages payable covered. Now we have to see the debentures. Debentures what happened?
Inflow of debentures 13,000.
Means issue. Issue of debentures 13,000 plus. Then
Retained earnings.
Issue of equity shares.
Equity shares. Equity shares also positive 4,000.
4,000. Then during the year.
During the year, dividend paid 2,500.
Dividend
Paid
2,000.
Yeah.
500. Okay.
Dividend paid will be negative item, no sir?
Sorry. Minus 2,500. Retained earnings is nothing but profit and loss account balance. Retained earnings or profit and loss account. Already opening balance how much?
Opening balance is 6,500.
60,500. By profit for the year?
Profit for the year is 1,000.
Actually, dividend paid is there. Current year la how much dividend you have paid?
2,500.
That income statement la deducted
Income statement la deduct avala.
It is not deducted, correct? Generally, dividend paid will not be deducted in profit, net profit. Generally, dividend paid will not be deducted in net profit. Net profit we will not deduct. In retained earnings only opening balance plus profit minus dividend, like that we will do. Okay. Profit and loss account for the year you will prepare profit and loss account for the year. In that dividend paid will not be deducted. So in previous question, income before deducting dividend 3.3 இருக்குல்ல. If it is just like that net income 3.3. In that case also, what is the general assumption?
Dividend is not deducted.
Dividend declared 0.5 is not deducted. That is the general assumption. Because profit and loss account last line item is what? To profit after tax. Profit after tax, the last line item. After profit only, if profit is available, I will pay dividend. Otherwise, I will not pay dividend. Correct? And dividend is paid to the shareholder. This is optional. If profit is available, I will pay. Otherwise, I will not pay. So, profit and loss account, last line item, profit after tax. Dividend paid will not be deducted. In profit and loss account, in balance sheet, it will come. Balance sheet, reserves and surplus, profit and loss account. In that only, we will deduct separately. Okay?
Okay.
So, to balance. What is the balance?
59,000.
That's what happened in retained earnings. Retained earnings 60,500, 59,000 change. Correct? How the change happened? Opening balance plus profit minus dividend. Okay?
Okay.
Or you can also prepare a statement like this. We will prepare note number 2, reserves and surplus. We will prepare a statement. Opening, addition, utilization, closing. In this, profit and loss account opening balance is, say sir, Karthik ji.
Sir, yeah, profit and loss account opening balance 60,500, 1,000.
1,000 is the addition, profit for the year. Utilization?
2,500.
In dividend paid 2,500. Closing 59,000. Right? So if every adjustment has been taken care, all items in balance sheet has been taken care. Now I should compute cash flow from investing, financing. So if a total 21,500 minus 46,000 plus 14,500, answer 10,000 negative value. Clear?
Clear, sir, but நான் இன்னொரு தடவை practice பண்ணணும்னு நினைக்கிறேன்.
Yes. Obviously, sir. Obviously, cash flow statement, more practice is required. But once you get the control, it will become much easy.
Okay, sir.
Because direct everything, it will be given in the question. Straight away, we have to see everything. That's it. Each and everything, we have to give adjustment under appropriate head. So, answer will be over. Okay. So, this sum you do first. Then, one more sum also I am giving for you. First, you do this sum. Send me the photo. Then, this question we will discuss. This question also you try. Uma?
Financing and investing need to do, sir.
No problem. Just read the question.
ABC Limited gives you the opening and closing balance sheet. Prepare cash flow statement by using indirect method. Liabilities, share capital account, opening 50 lakhs, closing 50 lakhs.
So, no change.
Yes, sir.
Then,
reserves and surplus, opening 26 lakh 50,000, closing 36 lakh 90,000.
what happened? Reserves and surplus closing is
3690.
Opening
26 lakh 50,000.
So the difference is
profit
for the year. Correct?
Yes, sir.
Profit for the year, how much?
10 lakh
40,000. Okay. Then
9% debentures, opening nil, closing 9 lakhs. So they have issued debentures
9 lakhs.
9 lakhs.
Plus. Then
trade payables 8,80,000 opening.
Current assets, current liability la fill pannilama?
Yes, sir.
Current assets enala trade pay, current liability, trade payable.
Current liabilities, trade payable, outstanding expenses, short-term borrowings.
Okay. One more point. Short-term borrowings, bank loan, even if it is current liability, it should be shown under financing. Okay. One more point. two things special for this question that I am saying now. First point on the, even if it is a current liability, bank loan should be classified under
financing activity.
Financing activity. That's one point. Then dividend payable is there, na?
Yes, sir.
Okay, in the question not significance because opening la 1,50,000, closing la nil.
So it is paid.
So no problem. So trade payable, outstanding expenses, other liability for expenses, both are same. Then here current assets and other current assets,
inventories,
inventories,
trade receivable, other current asset.
So closing trade payable.
Closing trade payable is 8,20,000. Outstanding expenses 2,70,000. Other current asset is 1,20,000. Inventory is 19,20,000. Trade receivable 28,30,000.
Opening
Trade payables is 8,80,000. Outstanding expenses 3,30,000. Other current asset opening 90,000. Inventories opening 20,10,000. Trade receivables opening 23,90,000.
Decrease,
Increase.
Yes. Decrease in trade receivable, increase. Increase in trade receivable, what I should do?
Increase in trade receivable, current asset is
asset increases.
We have to minus
4,40,000 minus. Then stock decrease.
Stock decreases, so we have to add.
Stock.
We have to add
90,000. Then other current assets increase.
We have to deduct 30,000 minus 30.
Trade payable decrease.
We have to decrease 60,000. Increase
outstanding expenses decreases. So
we have to decrease 60,000.
Everything taken care?
Yes, sir.
5 items,
Yes, sir.
Yes, 5 items over. Then non-cash items.
Depreciation.
How much?
Depreciation 1,80,000, sir.
How?
Opening will be 6,10,000. Closing will be 790.
Okay.
Closing minus opening 180.
Already the question
also given.
Question also 1,80,000 they have given. Then provision for bad debts.
40,000, sir.
Provision for bad debts total of 40,000 increase. From profit and loss account we have provided. Correct?
Yes, sir.
And one more point. Actual bad debts for the year, how much?
Actual bad debts is opening will be 1,50,000. Closing is 190.
No. That is provision. Actual bad debts.
2,30,000, sir.
Bad debts, normal bad debts will be deducted in profit and loss account. But if provision is maintained, already I told or not? I remember, I think, but where I don't know. Okay. So if provision for bad debts is maintained, bad debts should be debited to
Provision account.
Provision for bad debts. So if in this case, bad debts is not deducted to profit and loss account. Normally, what I told, non-cash expenditure la provision, bad debts is also non-cash expenditure I told. But here 2,30,000 bad debts is not debited to profit and loss account because provision account is maintained. What is the format for provision for bad debts account?
Provision
is a liability.
By balance brought down.
By balance, opening balance.
1,50,000.
To balance
carry down.
Closing required balance. And 2 bad debts by profit and loss account. That is opening balance. You are having 1,50,000. Actual bad debts
2,30,000.
2,30,000. Oh, bad debts 2,30,000. Closing 1,90,000.
90,000.
By profit and loss account total 2,70,000 you have debited to profit and loss account.
Okay, sir.
For your understanding purpose, I am preparing provision for bad debts. Here, it is not required. Here, just you can see the increase in provision. How much provision increases? 40,000. So that should be directly added to profit and loss account. Okay. If you add this 2,70,000, some more adjustments will come. That and all confusing, not required. So provision for bad debts working note separately I am showing. That's it. Right. So this is not required for this examination purpose. Provision for bad debts 1,50,000 is becoming 1,90,000. So 40,000 increase should be added to profit. That's it. Okay. Alternative assumption is also there. If you take 2,70,000, what I should do now? This bad debts I should reverse to trade receivable. Then I should compare. That is the other way. It will be confusing for you. So ignore. It is just 1,50,000 is becoming 1,90,000. So 40,000 you should add. That's it. Okay. This is provision. Hello.
I was confused there only, sir. I took that figure of 270 and there I was confused. But that's the difference I was getting in my net cash flow.
Okay. So you considered 2,70,000. Correct?
Yeah.
If you consider 2,70,000.
And I did not take it directly because it was
correct. That's what I'm saying.
Like that. How, I mean,
that's what I'm saying. If you consider 2,70,000, trade receivable opening balance should not be 2830. It should be 2830 plus 230. Like that you have to consider 30,000. Okay. 30,60,000. Like that you should consider. That and all confusing. So you ignore. This will be the easiest way to understand. Right. Then next.
Yes, sir.
Uma.
Yes, sir.
So provision 40,000 you have added, correct?
Yes, sir. Then cash flow from operating activities.
Over dana, right.
Yes.
Okay. Then
share capital, sir. No change. Sir. 9% debentures.
9% debenture what happened?
Increase, sir. It is
potage. Dividend payable
1,50,000 paid
during the year. So minus 1,50,000. Then
liabilities, short-term borrowings, bank loan. It is increasing by 1,50,000. So cash inflows are plus 1,50,000 from financing activity. Bank
loan taken
1,50,000.
Then plant and machinery.
Plant and machinery increases, sir.
So 13,40,000 purchase minus.
Yes, sir. Minus
purchase of fixed assets. Then
current investment. It is increases, sir. So purchase of investment minus.
15 minus
11,50,000.
3,20,000. Correct?
Yes, sir.
Purchase of investments. Then inventory, trade receivable, provision, current assets, everything over.
Everything is different.
So either equity shares no change. So here total is this. So net cash flow for the year is this plus 0.
Correct, sir. Opening and closing will be same.
Okay. Tally. Quick, complete this. Special adjustments for this question. First, provision for tax. How provision for tax account will come? Provision always credit balance, liability. So buy balance, opening balance, to balance, closing balance. It is similar to provision for bad debts. For provision for bad debts, you will have two bad debts. For provision for tax, you will have two tax expenses for the year. Right? But normally tax will be paid in cash. So two cash will come. And by profit and loss account will come. General assumption is what means provision for tax for previous year will be paid in current year. And tax la assessment year previous year is there na. Previous year tax will be paid in the assessment year. Assessment year na current year. Correct? So opening balance will be paid during the year. Closing balance will be provided from profit and loss account. This will be the structure. So in this question, provision for tax 3,60,000 opening balance is there. That would have been paid during the year. 3,60,000 would have been paid during the year. And closing balance, whatever closing balance is there, 3,40,000, that is provided from profit and loss account for the year. Okay, this is the general assumption. So what adjustment you should make? In operating activities, profit, add provision for tax. Then only you will get a profit before tax. Because this profit is increase in profit and loss account only we will take. Correct? So profit after tax is there. This is profit after tax, which is increase in reserves. Here I should add a provision for tax, then only you will get a profit before tax. Here how much I should add? 3,40,000 I should add. In cash flow statement, last or less taxes will come. Taxes paid. Taxes paid during the year will be 3,60,000. So provision for tax, whenever it is coming, opening balance will be paid during the year. So last or less taxes paid, opening balance will be paid. And whatever closing balance is there, that will be provided from profit and loss account. So in profit and loss account, if you are adding with the profit to get the profit before tax, you should add a closing balance. One adjustment. Special. Then second adjustment is what? Read sixth point. Karthik ji.
Company decided to value inventory at cost, whereas previously the practice was valued to inventory at cost less 10%. Opening inventory according to the books was 2,16,000. Closing inventory was correctly valued at 3 lakhs.
Okay. Closing stock, opening stock.
Valued correctly.
Closing stock valued correctly. 3 lakh. Opening stock is what? In the books, 2,60,000. So 2,16,000 in books. What is books value? 100 minus 10%. 90 da idu. Correct? Opening stock in the books is at 90%. If cost is 100, I will deduct 10%. So 10 rupees I will deduct. So book value will be only 90. This 90 is 2,16,000. What would be the cost?
2,40,000.
2,60,000 divided by 90 into 100. 2,40,000. So 24,000 will be the reduction. Right? Normally, profit and loss account, if you prepare trading and profit and loss account, two opening stock will come in debit side. Correct? As per books, 2,16,000 opening stock. As per books, 2,16,000 is the opening stock. But we should value closing stock is at 100% cost. Closing stock 100% opening stock 90% we cannot compare here. Problem comes. Correct? So what I should do? I should convert this to original 100% cost. I should convert. I have converted into 2,40,000. So stock value will increase. stock value will not be taken as 2,16,000, 2,40,000. Right? So, profit and loss account, what would be the balance? This 24,000 profit and loss account, what will happen?
So increase in opening stock. So the profit will.
Yes. So stock value you have to increase. Two things like you can assume this. Stock value 2,16,000 is becoming 2,40,000. Asset I have to increase. How to increase the asset? Asset I have to increase now, I have to debit. So stock account should be debited, profit and loss account should be credited to increase the opening stock. First, for simple understanding purpose, stock is an asset. Opening stock, it is included in the balance sheet at 2,16,000. I should make it to 2,40,000. 24,000 I should increase. How to increase? Stock account should be debited. Already having debit balance, we should debit again. 24,000 you should debit. And it is a gain for me to profit and loss account 24,000. This entry you have to pass to increase the opening stock to 2,40,000. This is one way of thinking. Another way of thinking, opening stock of the current year is nothing but the previous year closing stock. Correct? Previous year closing stock is the current year opening stock. So previous year closing stock is also undervalued. Closing stock 2 lakh, instead of taking 100%, 2,40,000, I have taken at 2,16,000 only. So the profit, whatever I have computed, that is based on 2,16,000, not 2,40,000. If closing stock increases, what will happen? Profit and loss account, closing stock will come in this side. So closing stock 24,000, if I add for the previous year, profit will also add. No more adjustments, assuming there is no other adjustment. Closing stock, if I am increasing by 24,000, profit will also increase. So, if you do this adjustment in the previous year balance sheet, please remember current year closing stock is correctly valued. We are seeing the adjustment only for opening balance sheet. Opening balance sheet, we should do one adjustment. What adjustment we should do? First type, stock you have to increase. Stock you have to increase by 24,000. So asset will increase. Then liabilities, profit and loss account also it will increase. First type. So in this case, revised stock value is what? In opening balance sheet? 2,40,000. But actual stock is not there. Current assets are there. Other current assets stock would have been included. So revised other current assets will be 11,10,000 plus the increase of 24,000. This will be the revised revised other current assets. 11,10,000 plus 24,000. Okay. Because 11,10,000 already 2,16,000 stock is there. Just we should increase this 24,000 only, we have to increase. The first type. Second type, then revised profit and loss account balance is also what? Opening 2,40,000 it is given. 2,40,000 plus this 24,000. So 2,64,000. So opening balance of profit and loss account also we have to change. Opening balance of current assets also we have to change. Increase by 24,000 we should increase. The first. Or in second method, what we are assuming? Opening stock means previous year closing stock. So previous year closing stock increases, profit will also increase. In this method, I'm thinking. In this method, closing stock increases by 24,000. Same thing. Other current assets will also increase by 24,000. Profit and loss account 2,40,000 will also increase by 24,000. Okay. So if now for computing profit, increase in reserve you will take for that closing is 3,40,000. Opening is not 2,40,000. Opening is what? 2,64,000. Like that you have to consider. The first point. Then provision for tax I already told. Okay. Then one more point is also there. General reserve. General reserve opening is what? 6 lakhs. Closing general reserve is 7,60,000. So increase in general reserve, how increase will come? You have to transfer from profit and loss account. So profit and loss account debit to general reserve, 1,60,000. This entry would have been passed. Okay, or for computing profit, you just take the total reserves and surplus. Alternative method. So in this method, first you should compute profit and loss account increase separately. Then 1,60,000 you should compute separately. Or I am taking total reserves and surplus closing, total reserves and surplus opening. Like that also you can take. Total closing reserves and surplus will be 3,40,000 plus 7,60,000. Then opening will be 2,40,000, 2,64,000 plus general reserve 6. So total increase is 236. Like this you can take. This is the profit after tax. Here what I am doing? Total general reserve I am taking. Total reserves and surplus, which includes general reserve and profit and loss account. Both I am taking. Or alternatively, what you should do? First time you have to take profit and loss account alone. So profit and loss account closing is 340. Opening is not 240. We have revised 264. So increase in profit and loss account is 76. Then 76 plus transfer to general reserve 1,60,000. Then also you will get 236. So profit for the year 236. How to arrive? Profit for the year 2,36,000. You can arrive in two ways. First, total or reserves and surplus la what is the change? Like that also you can change. You can take, or just what is the increase in profit and loss account? 76. This is the profit for the year. Then 1,60,000 is transferred to general reserve. So totally you will get 236 profit for the year. Like that also you can compute. So these are all the adjustments I told. All other adjustments are already we have seen. So no more adjustments. This is homework for you. Do and come. Today class is over.